Tyson, you and Ryan have developed a unique solution called the B.O.S.S Wealth Plan to simplify complex financial situations. Can you explain what it is and how it works?
Great question, Paul. You know, recently in the USA Today, there was an article written by one of their top financial experts. And the headline on the article said this: retirement planning, don't plan on Social Security. You know, that's pretty remarkable, that headline right there. And what we're really talking about are two different things. You know, recently in 2008, there was a huge downturn in the stock market where one generation lost 20, 30, even 40 or 50% of what they were planning on retiring with. And they didn't have the opportunity now to retire at the time that they expected to. We also have another generation who can't plan on Social Security. And 10 years ago, Ryan and I saw cracks in that foundation. Now what we're seeing are gaping holes in the foundation of how people plan for their financial futures. And so as we talk more about this, what the B.O.S.S plan really is exactly what we talk about. It is build the optimal system of security. We want people to understand and be able to plan on building their own system of security instead of relying on things like Social Security. And so as Ryan and I saw those cracks in the foundation, we found 5 separate pieces of that foundation that I want to share with you today. First, we decided that if we were going to create a financial plan, it needed to be simple, that anybody could follow. Literally, we needed to have a plan that you didn't need to be a PhD, you didn't need to have a whole bunch of experience in a financial plan. You just needed to be able to follow something simple. Secondly, we felt like that it needed to run on autopilot. Once you set it up, and once it was set up properly, it ran on its own. You didn't have to worry about what the next step was going to be, or spending a lot of time looking at charts and graphs to understand how to restructure that plan on a yearly basis. Next, it ought to work for everyone. You know, there's a lot of plans out there for millionaires. There's a lot of plans out there that people talk about for people who don't have a lot of money. And we wanted to have a plan that everybody could have access to, whether they had $1 million or maybe just a few $1,000s that they could put towards that plan. Next, we obviously wanted it to be safe, and I think all of us feel that way now, especially since the meltdown of 2008, and we've seen the real estate meltdown as well. We've seen what a lack of safety can do in our financial environment. And lastly, this is a pretty obvious one, but we wanted there to be results. We wanted this to be a plan that everybody could count on. And so Ryan and I look at things through a very simple prism. And we like a principle called the Occam's razor. It says the simple answer is usually the best answer. So as we went and talked to the top financial planners around the country, we asked them, what should be part of everyone's financial plan? And without fail, this list came up. Now let's run through it really quickly. Everybody needs life insurance. Everybody needs to have something to take care of major medical expenses. People need disability protection. They need to have some kind of guaranteed savings or an emergency fund. They need access to money. They need to plan for college for their children. They need to have a retirement vehicle that they can count on. They need to have some type of asset protection in case they get sued. Obviously, it needs to be tax efficient. And lastly, there needs to be an estate plan in place. So as we looked at this through the prism of Occam's razor, we said, if somebody went through this list, there would need to be at least 9 different financial vehicles that somebody would have to put in place. Now, not only does that become cumbersome, but it becomes something that is very expensive. So Paul, as we evaluated and tested for a plan that wouldn't need 9 separate vehicles, this is what we saw. Whole life. As we looked around and looked for a solution that would take care of all of these things, whole life has it. So Paul, let's run through this list again, now knowing that we're talking about whole life insurance. First and foremost, obviously, because we're talking about whole life insurance, there's going to be a death benefit as part of the plan. Secondly, there's a popular thing out there called health savings accounts. Well, with your life insurance plan, you have instant access to the cash value, including if you needed to use it for a major medical expense. Next, disability protection. There's a specific rider that you can attach to the policy that gives you disability protection. Now, what do I mean by that? What that means is if you become disabled up until the age of 65, the life insurance company will pay that premium for you. Next, guaranteed savings and emergency fund. This is a big one today in today's economy. People need access to funds quickly and for whatever you need it for. And the guaranteed funds that are available are growing throughout the life of the plan at between 4 and 4.5%. Next, access to money for major purchases. Now think about it. People buy cars, people buy homes, people need money for a business. You can have access to that money for anything that you need. It gives you more flexibility than any other plan in access to that cash. Next, college savings. You know, another vehicle out there that's commonly used by top financial experts is this college savings plan. Well, it works great if your child goes to college, but what if they decide that they want to start a business instead? College savings plans only work in one way. B.O.S. gives you the option to use even more. Next, as a retirement vehicle, are you aware that we can tell you, based off of the amount of the policy, how much supplemental retirement income that you will have at retirement? There's no other plan that can do that. Paul, the next one is asset protection. Are you aware that with a whole life insurance plan, that in most states, your asset, the cash value, is protected? Protected from a lawsuit or from a creditor. That's unlike a money market account or a CD or other types of cash accounts. Next, tax efficiency. There are 5 ways that a whole life plan gives you tax efficiency, and if you talk to a qualified professional, they can share those with you. Lastly, as an estate planning tool, this creates a much easier way to pass on to your heirs in a tax efficient manner the cash value built into the plan. So again, as we looked through this list, we recognized the whole life was a strong answer. But I'll be honest with you, Paul, Ryan and I still had major reservations about these 3 obstacles that needed to be overcome. Obviously, a whole life insurance plan has always had a lack of flexibility. First in premium. You had that consistent payment every single year, and you had to make that payment every single year. Next, the death benefit in a lot of cases, if you had a level plan, did not rise, and so that's been one of the biggest knocks by Dave Ramsey or Susie Orman, as they said that death benefit doesn't grow. Next, slow growth. There's a big problem in our minds with zero cash value when, for instance, if you put $10,000 or $100,000 into that plan, it doesn't matter how much money you put into that plan. You still have zero cash value in the first year and in the second year. Lastly, and this goes into the slow growth, it's just too expensive. It has a lot of fees involved, and so that makes the growth even slower. And so as we looked at those obstacles, we said, how can we change that? How can we use existing pieces of the puzzle, the whole life insurance with existing riders, and be able to create a different method of growth and to overcome literally all 3 of those things? So that's what we did in building B.O.S. We obviously used a whole life insurance as the chassis. It still has all these huge benefits that we just talked about. But we found a little known rider called a paid up addition rider that really became the engine of how this worked. And it created more flexibility, and it gave between 50 and 70% cash value the way that we structure the policy. So if you had a policy where you were putting in $10,000 a year, you'd have between $5,000 and $7,000 available year 1 to be able to use. And lastly, we put a term rider in place to limit the amount of cost and to build cash value much more quickly. So as a result, we were able to create much more flexibility, much less expense, and much more growth using the B.O.S. plan and the way that we structure this.
Wow, there are a lot of great benefits. Are there any downsides to this plan?
Paul, I'm really glad that you asked that question because as with any plan, there are things that you need to watch out for. So let's talk for a second about expectations. First, safety. There are guidelines in place with this plan to make sure that you stay safe. As an example, one of the components of a whole life insurance plan is that you can borrow from it. So if you do borrow from it, obviously you need to pay yourself back. You need to pay back into the policy. Secondly, we get a lot of people who like complex things. You know, to be honest with you, if you're a day trader or you like to invest in options or currencies, this plan is not going to be for you, because instead of complexity, we've created a simple plan. And then lastly, we hear people in the press talk all about get-rich-quick plans. And we want to let you know that this is not a get-rich-quick plan. What we like to call it is a get-rich-steady plan. As long as you follow the system, year in and year out, you can have that guaranteed growth and the growth within the plan, overcoming all the obstacles that we talked about, and it literally can change your financial future.